Yeah, so I still think that if we stay above 30,000, I've said 5 to 7 days, you really wanna see consolidation and holding, not just a quick move above. But if we hold above there, then I do think the low is in at 15.7. Doesn't mean we're not gonna pull back to 20,000 during the cycle, right? It just means that at that point, I think the probabilities are that you have a low on the in the bear market.
Gareth Soloway is a well-known figure in the financial industry, highly regarded for his extensive knowledge of technical analysis, trading psychology, and risk management. He discusses the current state of the Bitcoin market, expressing a bearish outlook due to the ongoing bearish consolidation. Soloway believes that for Bitcoin to experience growth, it needs to maintain a value above $30,000. Although recent risk-off market sentiment has positively affected Bitcoin's value, Soloway remains bearish and analyzes the charts to determine whether the bull market has truly returned. He suggests that Bitcoin could potentially reach as low as $12,000 in a bear market. However, if Bitcoin manages to surpass $30,000, Soloway believes that the market can recover from the psychological lows of the 2021 bull market. He also mentions that historically, Bitcoin has declined when the stock market experiences a downturn, indicating that if the stock market drops significantly, Bitcoin may be affected as well. Despite his current bearish stance, Soloway asserts that he is ultimately a Bitcoin bull, expressing optimism about its long-term potential as the future of the digital gold world. He believes that there is a genuine need for Bitcoin in today's world.
Anything below that neckline, that's bearish. If you reclaim the neckline, it comes into neutral. And then if you get above the 30,500, it becomes bullish. So as a technical trader, there are ranges. There's neutral ranges, there's bearish, and there's bullish ranges. Right now, as long as we remain below that trend line, it's a bearish signal here. Because you take the highest point of that head and you drop a straight plumb line to the neckline, and that's a move of 4,165. And then per the break point, you would drop that same amount down 4165. And that's again how you calculate to a T the target where this would go. Now, what's interesting here is if we look at a trend line such as this, look at what that's coming right up into, right? So I
Wow.
love this. As a technician, I love when I see trend lines match up with other technical factors, because what that does is it gives me an opportunity to play Bitcoin for a long trade there. And I think that's important. Is I always look at long-term maxis in Bitcoin or crypto. They have these boots on made of cement, right? They can't move. I'm nimble. I'm jumping around. I'm going long. I'm going short. I'm short now via my service from near 30,000, and we're in the money, right? And then I'll cover and I'll go long at the right level. But it's all about just letting the chart speak to me. I mean, I agree with the not buying Bitcoin thing. I'm still struggling with him thinking that inflation is going to get back to a normalized 2% or less level. And I think that's where we differ just a little bit. If that happens, then you're right. Then the Fed can come out and do what they got to do, and gold probably doesn't become a major asset to the upside. By the way, I think eventually gold is inconsequential, but we're talking a decade away when Bitcoin finally matures into that digital asset. If I had the choice between gold and Bitcoin, I'm buying Bitcoin every time if it's equal to gold, if it behaves the same as gold, because I can move it a lot quicker than I can with gold. So again, it's an interesting hypothesis, and it's going to be interesting to see how it plays out. So number one, we're heading into uncharted territories with the Fed not participating in the potential recovery or even into the recession of helping be via printing money, right? So that is a whole new ball game for crypto. And I think honestly, the recession, the stock market is going to be the main driver, unfortunately, for Bitcoin, where it's de-risking, right? So I think we have a major downside move coming in the stock market. And I just don't think that, I think you'll get it cheaper. And again, just like Paul Tudor Jones, I'm a huge long-term bull. But again, why would I buy here if I think I can get it cheap?
The potential for gold to reach a new record high exists if there is a U.S. default and investors seek safe haven assets. In such a scenario, gold prices could surpass previous highs as investors flock to safety. Despite the absence of a crisis, gold's value has risen above $2,000 per ounce, indicating its resilience amid global crises, increased central bank activity, and concerns such as a global real estate slump, persistent inflation, geopolitical tensions, and the ongoing U.S. debt ceiling standoff. Analysts forecast the gold price to reach $2,300 on a sustained break above $2,070, the record high achieved in Q2 2023. The banking sector's instability and the debt ceiling issue have prompted investors to turn to gold as a hedge, leading to a significant increase in net speculative positioning in gold futures. Safe haven demand and monetary shifts are expected to drive gold to new highs. Wisdom Tree's model presents three gold scenarios: consensus, bull, and bear. The consensus forecast predicts gold surpassing previous highs and reaching $2,285 by Q1 2024. The bull scenario forecasts $2,517, while the bear scenario suggests a retracement to $1,725.
So short term, we know we hit a triple top on gold. Technicals signal that triple tops get small pullbacks and then usually will break out to the upside. So double tops, you can see here was your first hit, here was your double top. Double tops get big pullbacks. Triple tops usually get shallow pullbacks. I still think there's a little bit near term downside on gold to about 1925, give or take a little bit. But then my guess is you're going to break out to the upside, and I still have a $2,300 price target year end. I think gold, for instance, is the one safe haven. Like, as much as I think Bitcoin to me is like the son of gold, meaning like it's the adolescent of gold. Eventually it matures into being an adult and becomes the digital gold. It's just not there right now. Right now it's still very volatile. There's lots of emotion in it. It's not a pure safe haven asset. It's more of a risk asset. So if we see the stock market decline, Bitcoin's going to decline. Gold should actually move up for me, at least in this scenario. I think a lot of that is this is a safe haven. It becomes the place to go when nothing else looks good out there, including real estate. I see inflation remaining elevated, not seriously elevated, but like 3% elevated for the foreseeable future for the next couple of years. And as long as the Fed can't drop rates, the economy is going to get very, very scary for people because they can't come to the rescue of the market, and therefore gold probably goes.
According to Soloway, Bitcoin shows glimpses of its potential as an amazing asset that provides protection against global issues. However, he believes it hasn't fully reached that point yet. Gareth speculates that if the S&P 500 experiences a downturn by the end of the year, Bitcoin will be affected by the selling pressure. On a positive note, analysts maintain a $40,000 price target for Bitcoin, indicating favorable signs for its performance. Edward Moya, a senior market analyst at Oanda, suggests that Bitcoin has retained its gains amidst struggles with the debt limit and signals from Fed Chair Powell about potentially pausing the tightening campaign. Do you agree with Gareth Soloway's perspective on Bitcoin and its performance compared to gold? Feel free to share your thoughts in the comments section below. For more daily dose crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.